Yeah, Mike Swanson here. I want to give a really quick update on the stock market because yesterday the Nasdaq was down 74 points, the S&P was down 28, and the Dow was down 225 points. I think this is actually shaping up to become a correction that's going to last for a couple weeks and not just a couple of days. Um, Yesterday, 92% of the volume on the Nasdaq was down to the downside and 84% of the stocks are down. However, in the New York Stock Exchange, 70% of the volume was to the downside. Um, Normally, you see corrections go on for a couple weeks, then you get a day in which the put to call ratio spikes above 1. Today was at 0.85, and you usually see the VIX jump. The VIX did jump today, it was up 18%, but you also see the down volume reach over 90% and the number of declining stocks reach 90% too. That didn't happen. That said, the market is oversold. If you look at a 60-minute chart, the market did touch the 50-day moving average for the S&P 500, which is an area that tends to act as support. However, I think it's just going to set up for a short-lived bounce of 1 to 3 days, and then we'll probably be trading lower again. I don't think this is the start of a bear market at all. In fact, I actually have been saying for the past couple of weeks now that the longer-term trend of the market actually looks better than ever. The advanced decline line has confirmed this market rally. It's been very powerful. I can't really point to any sector that's in a bear market. I just don't see any signs of a bear market. But you do get corrections within bull markets. And again, to point out this down volume thing, you can see this is the ratio of down to up volume, and you can see on last week there's a little bit of a spike in that, just as there was yesterday, but nothing like we saw in February. And we also saw spikes in November, October, in July that coincided with important bottoms. So I'm really expecting this to be a correction like we saw in February or last July, one that's going to last 4 to 8 weeks from the top. We did have seen some very short-lived corrections within this bull market. For instance, in October, September, and in August and so forth, and they didn't even last a week. But I think there's a good chance this one is going to last a bit longer. And I'm actually thinking that we'll probably get a bounce here, or at least a pause in the correction off the 50-day moving average, and then a drop eventually to the next major long-term support level, which is between the 200-day moving average at 1090, the 150-day moving average at 1120, and probably the 50% retracement level of the February bottom and the April high. So basically somewhere in the 1130 to 1090 zone. And what I'll be looking for is signs of true panic washout, those volume ratios hitting those levels, the number of declining stocks hitting 90% per day in spikes in the VIX and put to call ratio, and all that happening somewhere down here. And once it does, I think the coast will be clear to jump into the market and really buy quite aggressively, because there's any reason to doubt that we won't see the market averages at new highs before the year is over. So that's going to give us a fantastic long-term buy point, but until then, it's going to be a bit more bumpy sailing for the stock market with some short-lived rallies and further declines. So the prudent thing for long-term investor is to evaluate your holdings now. If there's things lagging that aren't performing well, now's the time to get out of that with intention of using that freed up cash to buy some stuff later on down the road that looks more promising, which we'll certainly be able to find. If you want to aggressively trade, the best way to do that, frankly, is to short the market using 60-minute charts. Look at 60-minute stochastics, take short positions when they get overbought, and look to liquidate those positions somewhere down here. So you get a bounce back up to say 1190, you can put a stop around 1220 or something and ride that down here. It's very difficult to go long. I'll give you a couple long ideas, but it's fighting against the trend, and it's only for the most aggressive of traders. So anyway, I'll be talking to you later.